This Friday, after the US markets closed, I saw an article that said that Israel had started retaliating to Iran's aggression. So for a long time, there has been tensions in the Middle East. So as a market analyst, I'm just curious to say what could be the impact of these these tensions. So in this video, I'm going to just summarize what I think this means for investors and traders who participate in the US and Canadian markets. The first thing that I will say is that nobody can really predict the direction of the market with certainty, because there are a lot of variables that can come into play. But what happens is, for the market to really move, there has to be the interaction of buyers and sellers. In other words, big institutions, for example, in the US, that can buy or sell securities, those are the ones that can really move the market. So at any given time, and they are called market makers, they can really drive the market even up or down. But also even retail investors, those are individual investors like me and other individuals who participate in the market, they can, if they do so in a very concerted manner, like for example what happened to GameStop, they can really move the market in a specific direction. So that is something that is key. Now, as I look at this situation as a background, most manufacturing or service sectors, they require power. They use maybe oil in one way or the other, maybe to transport their goods or to in the production chain of their services. So what this means is that in the Middle East, being a key region, for example, where there is the OPEC, that includes countries in the Middle East, and also Iran is also another supplier of petroleum. And in that regard, what this means is that if these hostilities increase, and maybe if the oil supply, the free passage of oil is restricted, that could potentially cause some challenges in the supply chain. But that could be also be countered in a different way. For example, some people may not know that the US, they actually have oil. In Canada, we also have petroleum as well, particularly in Alberta. So what happens is, if there is also increased supply, that could potentially counter that. But in the short term, what happens is that yesterday I saw the S&P 500 index, that is the top 500 publicly listed companies in the US. Towards the end of the market, it was very volatile. It was dropping, but also the volatility index, the VIX, it was going up, right? So what this means is that if this continues on Monday, what might happen is that if sellers or people just continue to sell in anticipation of maybe increased volatility, or also the increase in the tension, what this could possibly result in is that if people continue to sell because of fear, for me, the way that I look at it, it could be possibly a good time to possibly buy wonderful companies that I understand and load up on the exchange traded funds that track the S&P 500 index. This is not investment advice, but this is what I think. At the end of the day, there's also the upcoming US election. So I was listening to Tom Lee, who works with Fundstart, and he was also saying from the conferences that he has been attending, most wealth managers and fund managers, hedge fund managers, they have been kind of like not actively investing in the market, kind of waiting to see how the outcome in the US would pan out. But for me, when I look at trading, as a trader, I want to make money in all markets, if the market is going up or in a down or up market. But how I do that is I use both fundamental and technical analysis. Technical analysis, basically trying to interpret market trends using charts, and then fundamental analysis, I look at the news that can potentially move the markets, like what happened in the Middle East. So what that means is, sometimes as a momentum trader, I just want to catch a wave if certain conditions and I go in detail in the course that I did on streetwiseeconomics.com. So I want to just catch let's say if the price goes up by $3 or $2, and if I have, quite a number of shares, let's say 1,000 shares, right? That could be that $2 move could result in maybe $2,000. So I'm a small retail trader, and at the end of the day, what I want is I want a small piece in that. So in this, I am saying, in terms of the strategy, based also on what is the unfolding situation in the Middle East, that is the heightened volatility, it depends on how the market will react, the market makers. If there is going to be a sell-off on Monday, depending on the escalation, if it's going to increase, and also what the US is going to say, right? Because the US, in a way, kind of like is well respected, in my view, in terms of what they say and what they do globally. That could potentially help I would say market players to make decisions, to assess the situation, to say, is it really dice or very risky to do that? Now, I will conclude by saying that as an investor, these normal fluctuations, they will always happen. They've always happened. There's also going to be things that can be unknowable, and also things that are known. For example, we know that regularly central banks, like in the US, the Federal Open Market Committee, they meet regularly, and sometimes even if there is an emergency. So those things can possibly move the market. But there are also other data points that are coming up this coming week, like the data that can possibly move the market relates to inflation, the CPI. Right? If inflation over the past month has increased, or the job numbers have gone up or down, these are the things that really move the market. So to then say someone can really predict the market, I think for me, what I do as a long-term investor is I understand the stocks that I really want to invest in. If they are undervalued according to my valuation ranges, I understand their finances. Those are the positions that I take. But I also want to have a hedged portfolio and have a bit of cash, right? A hedged portfolio, some people consider bonds, some people consider gold, because sometimes people, when volatility like what's happening in the Middle East happens, you see indices like the DXY, that is the one that tracks the US dollars relative to other basket of currencies. People run to DXYZ for SafeIt, the DXY index, and some people, what they do, they go to gold as a safe haven. Some people, they go to treasury bills, they go to bonds, right? So that's why it's a very good thing to consult a financial advisor to really have a portfolio that can withstand the up and down markets, because the market does not always go up and down. I thought with this, I would just share this with you. I hope you enjoyed this, but please trade and invest wisely, and may the markets be on your side. Keep an eye and be sure to subscribe so that you don't miss other upcoming videos. Have a wonderful day. Thank you so much.